Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Markets pulled back sharply as geopolitical tensions drove risk-off sentiment across crypto. Bitcoin fell below $68,000 amid escalating U.S Iran conflict fears, with major cryptocurrencies seeing 3 to 5% declines. Bitcoin currently trades at $67,891, Ethereum at $1,972, and XRP at $1.37. Over $302 million in liquidations hit the market in 24 hours. Large holders accumulated during last week's sell-off, then offloaded approximately 66% of those positions as Bitcoin briefly touched $74,000. Meanwhile, retail investors bought the dip below $70,000, a pattern that historically signals corrections aren't finished. Analysts warn that $67,000 represents critical support. A breakdown could trigger moves toward the mid-$50,000 range. The Fear and Greed Index dropped to 12, deep in extreme fear territory. Oil prices have emerged as Bitcoin's new leading macro indicator. As Brent crude holds in the low 80s and WTI in the mid-70s, geopolitical risk premiums are forcing treasury yields and the dollar higher, tightening global liquidity conditions that directly impact crypto pricing. The Clarity Act is gaining serious momentum. Industry leaders expect the bill could pass by July 2026, with bipartisan support from key senators. If enacted, the legislation would establish clear jurisdictional lines for crypto regulation, potentially attracting institutional capital from banks and asset managers. However, Coinbase CEO Brian Armstrong withdrew support, citing concerns the proposal favors traditional banking over crypto innovation. Bitcoin ETFs recorded $349 million in outflows on Friday, the steepest withdrawal in nearly 3 weeks. Year-to-date, spot ETFs have accumulated $55.37 billion in net inflows. Dollar-denominated outflows can appear massive without a single Bitcoin being sold due to mark-to-market accounting during price declines. The IRS proposed allowing exchanges to deliver tax form 1099-DA electronically only, with a comment period closing May 5th. The shift moves tax forms from paper mail to app-based document centers, effective as early as tax season 2027. Ethereum sits at a critical juncture, testing an ascending trend line that has held since 2019. Currently trading near $1,972, this marks the fifth test of this support level. A hold could trigger altcoin season, while a break would remove technical foundation for the long-term bull case. Ripple is repositioning XRP from payments infrastructure into institutional DeFi collateral. A native lending protocol launching on the XRP ledger will enable yield generation, with RLUSD stablecoin serving as the settlement layer. Prediction markets Kalshi and Polymarket are seeking $20 billion valuations, roughly double their late 2025 levels. The platforms processed $9 billion and $8 billion respectively in January. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.